Good morning, traders, and welcome to this live intraday strategy webinar. Today is Thursday, July 16th. Michael Boutros with you on the horn. Good morning, everyone in the room. Jay, Joe, Marchin, Mike, friend is in the house. Pete, Rohan, great to see you. Ziad, always a pleasure, guys. Great to be with you guys this morning. So it's been kind of a slow burner. Last 24 hours, we've made some moves in some of these majors, but we've just retraced them. So we've got a lot of ranges on tap heading into Friday trade, or heading into the start of Thursday trade, I should say. But on the menu for today, we'll hit DXY and Euro as always. We'll look at Sterling, which is still ranging right next to support. Dollar CAD, monthly opening range break still in focus. Gold, Kiwi dollar, dollar yen, dollar peso. And as always, we've got to wrap up with the SPX. Any other questions or trade setups, as always, feel free. Marchin, there he is. Euro pound. You love the Euro pound, huh? We'll take a look at Euro pound, Kiwi CAD, Aussie CAD, and Aussie yen. I gotcha. All right, let's jump right in. So here is what the DXY looked like a little bit earlier in the week. We had opened at a critical confluence zone, 96.51, 96.50. It was the yearly open. It was the 618 retracement. We closed right above that on Friday. Into the start of this week, we've simply been straddling it. A quick look back, here's DXY again on the weekly charts first. We finally made that push. This is where we opened the week, right around that yearly open. We've seen so many lows get caught there. Here's the drive. Look at today's low. It's right along that slope. Okay, this is just a same parallel of the same series that we've been following on all of these, trend lines off the 2011 low. So right there, you got the 50% retrace of the whole 2018 rally right there as well. 95.62 is the level we need to get to really open up, the downside for DXY. All things held constant, you're coming into basic Fibonacci support, not really a major level, 50% retracement, although I'll draw your attention to the low week close from right here in January of last year. I'll draw your attention also to the swing lows that we've been making. So a region of which on a weekly basis, momentum's at 40. Remember, we haven't seen a 40 break in momentum since the 2018 lows. So certainly if we get a 40 break here and a break below 95.62, that's conviction short bias for DXY. Barring that, the immediate downside starts to look a little vulnerable heading into 95.62. Okay, so the fourth consecutive weekly decline. DXY in the daily looks like this. So there's that key level, okay? The 786 retracement, 96.44, we stretched it. 2020 open rather, 96.50. There was the open. You can also judge this as the monthly opening range lows if you want, in which case you're looking for a late month low. Long story short, at this point, you look for resistance ahead of 96.50. You want to keep that slope line maintained. It's a 3-point touch, so it's a conviction slope. And your next major downside level is the same level we've been talking about, 95.50, 95.61. It's the measured move from the multi-month consolidation we broke back in May, and it's the 2019 low day close. So you're at some really nice levels. It's just that the momentum is getting a little tired. You know what I mean? Want to see a little bit more of a downside spur here if this is going to go. Here's what it looks like on the intraday. So you look at this chart, and even if it were to recover near term back towards yearly open resistance, that now converges on slope. That now converges again on the weekly open, which comes in just a pip higher, 96.55. And that's going to be where we want to see any type of advances fail if we're going to make that tag of 95.60. That's really the big whopper on the downside from here. So again, looking at this from your objective momentum profile, you look at this from the turn that we made at resistance back into the close of June. We haven't seen really any dramatic breaches above 60 or any tests above 60. Momentum profile remains bearish. All things held constant, you're looking lower, sub 96.50. Key support 95.60. Rohan, I got you. SPX is on the list. Absolutely. Any questions on DXY? You know, like I said, the Momo is looking a little tired, but the levels are still pretty clean. So we're in this descending channel, came off of channel support. Want to see any type of advances hold yearly open resistance if we are heading lower here. It's number one. Number two, Euro. Here's what Euro looked like last night, and here's what Euro looks like here today. So we came into a big resistance zone. We talked about these levels early in the week. The big level was 1445. We literally peaked just above that and turned yesterday. I thought we were going to get a bigger pullback, you know, maybe towards like 113.70s. Bottom line, we held the median line and we're just rebounding. Now, we haven't broken resistance yet, so I wouldn't necessarily be jumping on any longs from here. Here's what it looks like. All right, so we came into the median line, right on point, dribbled a little lower even. Here's the rebound, right back up at 1422, that near-term resistance zone. You're still at risk, right, for a bigger dump, in my opinion, while below 1445. 1365, 1369, this region is where you'd love to see a larger pivot in price, a larger support. For example, if this level right here had happened down here, maybe I'm pulling, you know, pulling hairs here. Maybe I'm just getting too close to price, but that would have been a much more conviction rebound, right? So this kind of makes me think we still need to dump one more time before return. End of day, we breach 1445. You're right back up on 115. That's your next major level on the upside. You had the 2019 high day close. You got the upper parallel there into the start of next week. You know, that's the real next level on the upside. Near-term support 1365. Here's Euro on the daily chart, just to highlight how significant this level of resistance is. Take a basic slope off the low for the year. Lows for the year tested 3-4 times, so it's a conviction slope. A parallel off that late March high, you know, call that a throw over. That same gradient converges on this year's high day close, 1437, and then again the 2019 high day close, or 2019 open rather, at 1445. It's just a big zone, big zone. And even Euro on the weekly charts, remember 1370 was the level that we were talking about for the last 3 weeks. If we get a close above this, this was the next major upside target. We're there now, 1445. Questions, comments, concerns on Euro? Okay, that's number two. Number three, here is British pound. Start from the top up, or top down, I should say. Here's SPX on the weekly chart. Major critical resistance, 27.17, 27.54. Haven't made another attempt since last month. It's not really much to look at here on the weekly chart. Okay, we're in this ascending pattern. We're at resistance, major lateral pivot zone in price. Go all the way back. I keep showing you this, guys, but it just keeps pointing out to me. It keeps jumping out at me. Lows from 2016, swing high late in that year. Highs for January 2017, break saw a pivot and an acceleration that year. Lows for 2018 in the close basis. Pivot break last year. Pivot break this year. It's loaded, and it's all right here at 127.54 on sterling. Here's what it looks like on the daily chart. So this pitchfork has been kind of messy, but I'm still liking it. All right, this is the modified pitchfork just off the lows we made in May and last month. You can see the median line has been offering clear-cut resistance, specifically here on a close basis. It's been rock solid. Momentum holding 60. So look, this is kind of make or break. I do want to see downside exhaustion on sterling if we're heading higher, ahead of 123.50s. This is kind of bullish inval. I know that doesn't help any of you who are holding longs from north of 125, but broader picture, right, on the daily chart. Just wanted to highlight your key levels. Major resistance on the upside, again, 27.10, 27.54. We got to get through this. That's your breakout zone at 128.40. It's the 618 off the low. It's also major downslope resistance for a multi-year pattern. So certainly that's your breakout level, but immediately this is a huge zone, huge pivot zone. Okay, and that extends just higher. So daily chart, again, you're kind of in no man's land here, mid-range for last couple of days. The intraday, though, looks quite interesting. So here are the levels as they stand now, and here's what they look like, earlier last night. Okay, so we had made full circle, right? We opened the week right below slope resistance. We talked about that. We were looking for exhaustion off one of these two levels into the start of the week. That was 2460 or 2509. We literally bottomed right in between that, in that zone. Here's the rebound, failure at the weekly open. Now you're getting consolidation. Series of lower highs, a series of higher lows. Makes me think this thing is coiling up for a breakout. Now, still the ideal scenario hasn't changed, okay? Ideal scenario, you find downside exhaustion ahead of 2460. You need to breach above 2665. It's the objective weekly opening range, last week's high. And then we're right back into that key zone, 2710, 2750. But we're in the uptrend until we're not. Okay, we're in the uptrend until we're not. I'm willing at this point to scratch this 50, okay, for the sake of slope and just to designate time a little bit more accurately. Take the weekly opening range low and put that, as your near-term bullish inval. Okay, so slight adjustment just to take into compensation more that time value. Let's drop that 618. Downside levels, you'd want to see exhaustion ahead of this zone. Breakout, key resistance. Key resistance. So I'm still thinking it's kind of like make or break here for Sterling. Probably get a couple more swagger turns here within this consolidation, but ultimately I do think you're going to get a breakout out here. And if the downside breaks below 2478, well, that's that break of the weekly opening range and uptrend support. At that point, you're looking conviction lower. Topside breach, I'm a little hairy about, because even if you get this breach, you still have to contend with this major area of resistance. So looking for some clarity here on Sterling. You're not really in ideal positioning here from a price standpoint. And let me get rid of this 6182 at this point. Okay. Let's just scratch this. Those levels you want to work with for Sterling over the next 2 days. Quick reminder again to anyone who's new to the room, I see a pretty packed room here today. Guys, you can take a snapshot of any of the charts you see presented here in the webinar. So if you need to reference these later in the day, feel free to click on that camera button on your GoToWebinar screen. All right, number 4 is dollar CAD. So Loonie saw some moves yesterday on the Bank of Canada interest rate decision. And we're still not really at a major inflection point. Well, let me take a step back. We are at a major support zone, but we haven't broken it yet. So it's still the same level, guys, we've been talking about for the last 4 weeks, and that's 35.15 on a weekly close basis. That's what we need to close below. That was the May high week close for last year. The gap breakout, right, that we made this year, the low for that week was right there at that same level, and you can see for the last 4 weeks we've been bobbling right along that. So we need a conviction close below 35.15 to get this thing going, looking for 33.23 and this slope confluence, which is going to sneak up closer to 32.30s later next week. The only thing I want you to look at here is just that you're at support on a weekly basis, and we want to come back and visit this chart tomorrow to see whether we close north or southbound of 35.15. Daily chart looks like this. Now, the key resistance zone that we've been talking about is 36. It's the 618 of the retracement of this year's range. It's the 100 from the decline off this year's high. My favorite Fibonacci confluences. You got a break on the way down, accelerated, false break on the way up, pivot into the close of the month, pivoted back below, and it's now the range highs for this week, for this month. Yeah, intraday we've spiked higher, but on a closed basis, guys, whoops, this thing has been rock solid resistance. So you have a monthly opening range right below resistance, straddling the monthly open. This is going to be a decent set once we get this break. Okay. Key support targets on the downside, 34.68, the 618, the rally. I have this level here I've been watching for a while, 34.32. That's the level I noted as the breakdown level. Okay. That's what we would need to see sort of give out to validate the turn in price. You got slope there. You got a really heavy pivot in price. It's the late highs that you made in June of last year. So you got some symmetry there too. But not really compelling here on the daily chart. I just wanted to highlight the monthly opening range when it gives out should give us a decent break. Haven't gotten it yet. Momentum ranging below 50. Here's the intraday chart. And again, here's what we've been following on dollar CAD in the intraday chart. So yesterday, last night, I just wanted to highlight that we were testing near-term slope support. This is a basic pitchfork newly formed that we took off the high, low, high. A parallel extended off that swing low we made into the open of the week, gave you exact support all night long. Here's the bit of a recovery. So again, near-term resistance right at that slope. I had it at the weekly open last night. Dropped that to the slope, which comes in somewhere around like 35.60s, I want to say. And then weekly open support still at 35.82. Ideal areas for failure if this is moving lower. Bearish inval right at that key resistance zone that we were looking at early in the week at 36.10. Slope is there now too. Former slope support is there as well. That's the only level that would shift the focus back to the long side. Again, not a surprise, right? On the daily chart, pretty clear-cut resistance. Same zone. Same zone. So looking for topside failure in dollar CAD today, a break lower. Don't get too excited unless we clear these two levels here. 34.68, that's 618 retracement, and then 34.32, this level here, that's the zone. If we get here and you're holding shorts, take some off the table, bring your stops down, get mad defensive. Okay, if it breaks, it'll probably be something like this. If it doesn't, it'll probably be a strong rebound. You don't want to be sitting in a short. So again, levels clear. We just need that punch in momentum. Now, yesterday's BOC did give us a kick. You know what I mean? It actually did prompt a nice break lower. All things held constant, it did constitute also a break of the objective weekly opening range. All things held constant, we should be looking for a Thursday, Friday low in dollar CAD. Questions on Looney? All right. Hey, Mike, do you have Aussie dollar on the list? Sure do, Mike. Yep. I'm lying through my teeth. I don't. Oh my goodness. It is now, Mike. You know what? Let's do Aussie right now. I'm sorry about that. Good catch. Did I not cover that this week? Goodness gracious. No, we've been covering he says no worries, man. Laugh my Yeah, let's take a look at what Aussie's doing. I've actually been tracking this one very closely. Look, the level of which we turned from, I hope no one here was surprised. We've talked about this level for literally 4 weeks. It's defined by this year's objective yearly open at 70.16 and last year's objective yearly open at 70.42 and this year's objective yearly opening range highs. It's all right here. It's all right here. And I've been telling you guys about this. We love the Aussie long side. We loved the breakout. We love this breakout. Ever since this top side bounce, I've been, I want to see what goes on here. This is huge. We need a weekly break above 70.42 to continue the upside. In such a scenario, you got 71.20, so you got another 60, 70 pips, 80 pips on the long side, looking for that 618 of the decline from the 2018 highs. All things held constant. We're at resistance. We're at resistance. Aussie's at resistance. Okay, doesn't mean it's not going to break. It means we need to look for some sort of reaction up here. Here's what it looks like on the daily chart. I mean, come on. Look at this thing. Can't make this stuff up. We'll come back to gold. Where was my last Aussie update? You know what? It's on the list. I don't know why. It was on the intraday chart on the 14th, apparently, which I don't have here. Put that in place. There we go. Here's Aussie. Here's Aussie on the 14th, right? And I was talking to you guys about this on Monday in the webinar, and I was like, well, what the heck is this? You know, if this is a break of support, give me some push, give me a drop, give me something. And always be mindful of these things, guys. Always be mindful when you get a break of a slope that you've been watching for a while and you're like, all right, this should define the move, and you get something like this, it's always prudent to sit on the sidelines. What could be happening here? Couple of different things. Well, first thing that comes to mind is this could be a simple false break of support and we're about to blow through into 72, right? Also could be this is just a break of support, real shallow, checking it as resistance and then move off again. All adding to the significance of this pivot zone right now being absolutely paramount. Now I have the high day close there labeled for you guys at 69.97, I believe it is. So I'm gonna remove that just for the sake of keeping the charts clean. Okay, we're really focused on this 2020, 2019 open, 70.16, 70.42. That's major critical resistance. We're there now. All right. One other thing I'd highlight on this heading into the close of the week is that the monthly opening range is taking shape right above the monthly open, right below key resistance. The breakout of this well-defined range should be pretty evident, right? We should get a pretty strong conviction move on that. So we're looking for clarity on Aussie. Sorry I don't have more good news for you, but it'll come. Here's what the intraday chart looks like that we've been tracking. And again, you know, it's actually been a pretty clean trade. Here's what it looked like back into earlier in the week on the 14th. You know, we opened up, bounced, talked about last week's open, which was last week's opening range lows, support, support, support. We opened the week with support right off the bat again. Here's the rally, back into resistance, 2019 open. We turned just pips ahead. The high registered at 70.37. We're looking at 70.42. We're looking at 70.42. So you get the picture here. That could have been the exhaustion punch into a key resistance, and you're in for a bigger move lower. At the end of the day, from where we are now, I'm choking up near-term support and bullish inval to the weekly open. The weekly open comes in at 69.56, and that converges on slope. So I'm more inclined to choke that up here, and you know, a turn below that would certainly, in my mind, be a corrective move here in Aussie. So something like that. Now, if we get that break, we'll have to reassess. One of the first things I would do is just tack on a quick retracement from the low. And again, there's no merit to this yet because we don't know that this is a conviction high. But just to bring things into the fold here. Don't like working with the 236, so let's clean this up. But you could get a picture of some of the levels that we'd be focused on, right? 38.2, I wouldn't even stress that actually. The 50 comes in down here, right, with the July objective monthly open. That's right above the 69 handle. 618 of the advance takes into 68.76. Both levels on the downside if this breaks. All things held constant, you're at risk while below 70.42, that key resistance zone we've been watching on all 3 time zones. Make sense? Mike says, good enough for me. I appreciate the analysis as always. Cheers, Mike. Yeah, thanks for bringing that up. I don't know why that's not on my list. It's a Thursday. We're getting towards the end of the week. You know how it goes. All right. Gold. So that was number 5. Okay, gold number 6. All right. Who's in on this gold trade? So, you're ranging, and you're not ranging at resistance. You're not quite at support. Um, there's not really a trade here for me. If you're a longer term position trader and you've been holding gold anything south of 1780s, I think you're just moving up your stops. Um, if you're looking for new positioning, this is coiling up. I wouldn't, be jumping into anything here just yet. Let me take a step back. Here's gold on the weekly charts. All right. Now, we've talked about 1765. That was sort of a little level that we were watching, the swing highs that we made here, but it converged on these slope patterns. Again, remember that the whole thing that we've been focused on since this rally was this upslope. And whether this upslope was a legit break or whether this was the onset of upslope resistance and you're looking for a move down to upslope support would have been, pretty big correction. We were talking about that a lot this year, right? And we held that 1733 level for weeks and weeks and weeks, couple false breaks. Here was the breakout again. That secondary slope gave out a couple weeks ago. So this is a conviction breakout, guys, on all accounts. Now, doesn't mean you're not going to get interruptions. And we are getting ongoing momentum divergence. I recognize that. But peep this. The 2012 swing high hasn't been cleared on a closed basis. It shows like it is now, but we didn't clear this on a closed basis yet. Support, any downside moves, you really should be capped by 1765. The next upside levels, it's not here on this chart. It's 1820, which we're just trading shy of, but it's the high week close, the record high week close, and that's up at 1856. So, Mike, what are you saying? You're kind of bullish, but you're not bullish anymore from here, or what? No, we're constructive longer term. It's just that if you're not already long, this is not where to jump in. You know what I mean? We could easily get some setback here, but even if we do, that would be within the confines of the uptrend still. Here's what it looks like on the daily chart. Right? So even, basic slope patterns that we were looking at all broke. Support, support, support. It's, just not a compelling trade from here. Monthly open comes in at 1780s. Next level of upside resistance that we want to clear is 1820. Here's what it looks like on the intraday. Hey, Mike, sorry, but I need to join the Are You Covering My Favorite Pair list. Would you be able to take a quick look at Peso for me? Many thanks. Gary, I got you, brother. It's on the list. 100%. Yeah, Peso's actually been really clean. I feel, weird saying that, but it's been really clean. I'll hit it for sure after this. Here's gold on the intraday, guys. I haven't seen any man in the room, my gold traders, my gold girls for a while, but this is, what do you want to do with this? It's pretty objective. You're in upslope resistance. You're in upslope formation. You're coming just beyond that fib level that we turned last week. Here's the weekly opening range intact right above slope support. There's really nothing to do, guys, until we clear this out. So even if we break 1830, watch 1820. This would be like a classic, guys. This could be a classic false break the weekly opening range to tag that fib consideration, then pull back. So 1820 is the breakout zone. And then, the weekly opening range is a little bit lower, but if you break 1795, that's a conviction, in my opinion, for a larger recovery. I've been trying to find some slope to get some clearance on this. So I need some clearance, but there's just not much to work with yet. So gold ranging just below resistance. That is number 6. All right, Gary, let's hit Peso. It's number 7. Here's what Peso looks like. So I don't think I need to hit the Peso, on the weekly charts, because the weekly charts are kind of boring. There's not really much to look at for here. Just to highlight that we came off resistance. We turned right ahead of key support, which was really frustrating in June. Here's the turn off resistance last week on a pretty nice reversal candle. And here we are sitting at slope support. So the only one thing I want to highlight here, Gary, on the weekly chart is that you're sitting at upslope support on a weekly close basis. We'd love to see that break to give us the conviction downside, Gary. More so even 22,037.6 here, 2017 swing high. But you can kind of see there's not much to get excited here. Momentum is like, what the heck? So here's peso on the daily chart, little better, and that it continues to highlight the critical support juncture that we talked about into the start of the month, which was 1315 to 1503. The 2017 high is a little bit lower, but it's really this fib consideration. It's the 50 of the yearly range, and the 618 of the advance just off of the June low. Both are right here. That's the monthly opening range low. In case that wasn't enough, Gary, you've got slope support right there as well too, the median line. So for me, that's the break we need to get the next leg lower in price. If we do get that, the next objective daily target would be down here at 2316 to 2941. You might want to keep in mind, I mean, from a scalping standpoint or intraday standpoint, if you're near-term trading this, you might want to just consider those lows. Okay, so like 2146.90s, 21,500 maybe. But you get the picture. Here's the intraday. And here's how peso's been looking. So we covered these guys. And here's peso earlier in the week. All right, so it's a slow burner, but the levels have been reacting really well. So here was the weekly open. We talked about when we were starting at resistance. We're looking for exhaustion ahead of that 618. Pretty nice deal. You turn just ahead of it. Okay, move lower, sat here for a little bit. This, in my mind, was a break of the weekly opening range lows, which tells me I should be looking for a Thursday, Friday low. So when this thing turned right ahead of that 618, which was our next objective, that's exactly where you wanted to see resistance, the former opening range lows and the weekly open. All things held constant, you're bearish below 2259.70. Your downside targets haven't changed. They're still at the 618 extension and the 618 retracement. So 22, 23, 22, and 22, 13, 48. Gary, questions on peso? The only problem with this is the problem that we're seeing across the board is just Momo. Just momentum is waning on all these, but the levels are pretty darn clean. Pretty darn clean in my opinion. All right. Cheers, Mike. You are a superstar. My pleasure, Gary. You're more than welcome. Will you get a chance to cover kiwi and oil, Rohan? I don't know about oil. It's not something I've been tracking. It's such an expired trade, in my opinion, after the move that we saw last month. So I'm not really been tracking oil. Kiwi is on the list, and kiwi is actually next on the list. Here's number 8, kiwi dollar. So I have written down in my notes range. Here's what kiwi looked like earlier this week. So we were coming off of a pretty big resistance level that was 65.85. Here's New Zealand dollar now. That level also kind of converged or coincided with this slope. So I'm going to zoom this out. This is the daily chart. I'm going to zoom this way out just to show you. This is a basic trendline resistance extending off the highs from 2017 and 2018. We've been taking parallels off that since that calendar year. This is a parallel off the lows, support, support, break, acceleration, resistance, resistance. We're there right now. Now, just higher of that is the lateral level that we were talking about into the start of the week, and that was 66.07 to 66.27. The gap that still is uncovered, and the 100% extension of the advance off the low. We're looking for exhaustion off one of these two levels. Now, I don't think you've gotten a conviction exhaustion spike yet, but the risk still remains. The risk still remains to the downside, in my humble opinion. There's nothing changed here. You got that divergence level into the highs. You got that longer term slope. You got that major lateral level. So even if you spike through, you'd be on the lookout for like a spike high or an exhaustion here. And again, just take a look back on the weekly charts. Here's what Kiwi looks like longer term. It's kind of like Aussie, right? Except not quite at the same levels, right? Remember, Aussie's testing its 2020, 2019 yearly opens. Aussie's testing its yearly opening range low. Kiwi is not. Kiwi is not. And again, these non-confirmation highs typically can be very indicative of market turns or market exhaustions. Another reason why I think me and Jamie, we're both on the lookout, for a possible move lower here. So take that into account. I'll bring your attention again to this weekly chart. I'll be putting a piece out on this on Daily FX, I think tomorrow or later today. This is longer term weekly chart. Here's the pitchfork we've been following from 2011 and 2014, guys. Here's the upper parallel. I mean, you can't make this stuff up. Look for resistance here in Kiwi. What would the breakout? So the breakout for me in Kiwi would be a close above 66.27. A weekly close above this would be breakout central till we do the long sides, vulnerable. And here's price pushing into resistance on momentum, pushing into 60. Should see something here. Should see something here. All right, so that's Kiwi on the weekly. That's Kiwi on the daily. Here's Kiwi on the intraday. Really no change to any of the levels that we've been tracking, okay? So from last night, or from the 13th rather, here's where we started the week. Here's that pump fake. We're looking for exhaustion ahead of that key resistance. The move lower took out 65.30, took out 65.20, but we turned ahead of that 50. And now we're right back into the weekly open, right back into the weekly opening range. We're sitting mid-week range. Not something I'm quite interested in. Now, if you put a pistol to my head and said, Mike, what's like if you had a dream, right? And you had what was your favorite scenario? I'd say we hold here, make one more push into either the median line or even here and fail for the move lower. If we don't, and this just collapses, there's nothing to do on the downside if this just goes from here. You have to wait for the break, retest, and that would be your entry for the move. Of course, if you're in the active trade right now on the swing side of things, you're all set. Your stop's at 66 and change, and we're looking for at least half of the position off somewhere near 65.80s. Questions? All right, so that is New Zealand dollar number 8. Number 9, the abomination in the flesh. Here's dollar yen. Well, you can you can't really get pissed, but at the same time, you can't really be happy with it. The levels have been ping pong, false and sneaky breaks below the weekly opening range and below slope resistance was the name here. Here's dollar yen as it looked back on the 14th. So recall that we covered this right into the start of the week and we were trading and about to open right here. Why is that level important? My favorite Fibonacci confluences, 100 off the high, 618 off the low. Really nice level. We opened the week, dribbled down to slope, bounced. We talked about it again here on the 14th, saying, hey, this is resistance. We're looking for exhaustion high either here or at that 618. It's one of these two levels. We need to see a break below 106.80 to get this thing going. Turned right there. False break. Never even got a candle close below the weekly opening range. And here we are back at slope resistance. What do you do with this? It's the abomination, man. I would say you could get another spike fake towards 107.40. I do want to see this thing ultimately kind of break higher. If this 106.87 level is a hold for the second time, right? Key fib levels, then if this breaks, we should get resumption. Okay? If this pumps here and fails, well then, at that point, even before the break, I would expect to see that you'd see a much more tumultuous decline towards 106.30s. But all things held constant, you've essentially struggled and defended slope support for the second time. So for me, it's all about 106.87. It's all about 106.87. Gary saying the abomination nod didn't get me this time. Yeah. I mean, the short was great into 106.87. Even if you took the reversal or that failure at 106.87 on a long basis, you're still pretty good. But I'd be out. I'd be out right here. I would have been out at 107.09, but I'd be out here. Okay. Again, always take a step back when things get messy, and especially you're looking at a trade that's as notorious as dollar yen. Always take a step back and get as objective as you can. What happened since the start of the week? Well, I see a low, high, low, a check of the opening range for the week. You're sitting mid-range. You need a breach above 107.40 or a conviction break and close below 106.80 to give us guidance here. All things held constant, you're checking near-term upslope support. Questions on dollar yen? Number 9. All right. So SPX, number 10, and then let's jump into your questions. Here's SPX. And here was our last SPX update. Right here. I'm sorry. 12th. Yeah, that's it. So here's what SPX looked like basically into the close. I think this was on the 12th, right? Last week, or break of key resistance. So look, let me take a step back. Let me go to the previous update. Here's SPOOs on the daily chart. Okay, this is back from the 8th, so into the start of July trade. We had broken this multi-week consolidation to the upside. Next day, we actually came back and tested it as support. 2 levels of major focus on resistance that we were looking at. 32.19 is that 2020 open objective level, right? And then the 88.6, which is 32.58 on the upside. We're constructive above the monthly open. So you got a couple of downside days, sure, okay, cool. Didn't even make a test of the monthly open. Here's the yearly open and 100. So once we got the breakout, 2 equal legs off the low gave you 32.26. Here's what it looks like on the intraday chart. And again, here's what it looked like most recently on that breakout above resistance. So here was that breach. There's the 2020 open. Again, the 100 has been added since then. Pull back, found support right at the 38.2, or at least a little bit deeper than that. And here we are again, just holding this range right below resistance. Remember the longer term target 32.58 is that 88.6 from the drop. So looks constructive to me, guys. You're marking divergence into this highs. You're holding yearly open resistance. You could see a pullback into 31.70, which still be within the confines of this ascending channel. 32.58 still the major resistance that we didn't quite get on this last pump that I would love to hit. And that converges on basic channel resistance later into the start of next week. Not too exciting, right? Not too exciting. The reversal off 32.26 I think was magnificent. This was a beautiful move. Even the breakout through 31.81, this move just in this little area I think was beautiful. Here, it's gonna get chop fest, right? You could get another pump fake and a move lower, but for me, sub 32.58, I'm not really too keen on establishing new long positions, at least not from these levels. Questions on SPX? Wish I had a little bit more conviction for you as far as near term. Something to get excited about here, but it's a pretty massive, massive level of resistance. And you haven't quite got the recoil and rebound off. You're not really getting the breakthrough either. So use some caution on this. Now, guys, also keep in mind SPX is very sensitive right now to all these, all of these headlines with regards to ongoing developments in both vaccines and therapeutics, which have been sort of major market movers as of late. All right, so that's everything that's on my list. Let me see if I can get through all of Marchin's list here. You got quite a level to look at. So euro pound again. Um, I'm not really sure what's been going on there. I think we looked at this with you earlier in the week. So objective things, right? Objective things. Is your monthly opening range. This was your monthly open. Okay. So right off the bat, I mean, again, I'm not playing the Twitter card, but you're gonna find people on Twitter calling this a head and shoulders, look for the sell and all that. I'm not opposed to that, but again, I've talked to you guys how I trade head and shoulders and how not to trade head and shoulders. So to even suggest that here would not even be something I would be looking at yet. Um, Yeah, and it looks like, I mean, you can interpret this a couple of different ways. The consolidation pattern, you could see that this was just a near-term consolidation that broke to the upside. Uh, but the magnitude of that rally is, in my opinion, pretty complete already. Right? Breakout, here's 618 resistance. Oops. Yeah. Look, I don't have a strong opinion on this, Marchin. My humble opinion, my man, is I'd be looking for topside exhaustion near term. Couple different reasons. Um, First of all, this looks like a clean five-way pattern to the upside. It might just be me. I'm not really huge on Elliott, but it would have me looking for one more low for a corrective stance on this move. Secondly, um, you've got momentum at 60. I mean, it's a constructive momentum profile every way you look at it, but you got momentum at 60, you got momentum holding 70 intraday and price at resistance just above the monthly open. So like, pull back towards 90, maybe look for support. Breakout above 91.40 is what's needed to get the validation for the next leg higher towards 93. That's the high day close that we made back last month. And it's also um, apparently a lateral level we've been watching for some time. It's the high day close from October 2016, so huge, huge level. That's all I would say on Euro Pound, Marchin. Not really a trade. I mean, I can say with conviction I haven't traded this probably in 10 years, but just for just for color there. Hope that adds some clarity. Kiwi CAD is a trade that we have been following. Looks like that resistance at 89, although you had a couple of days of fake out, is starting to materialize. So we were looking for a downside move earlier in the week. You got one more pump fake here, but that held. So I still think the same exact thing I did when we talked about this last, right? I think you have a near-term correction lower. You're basically at support right now. Even if you drop this to the other support zone, you still leave a little more room, but you get the picture. Here's the chart that we've been following. It's been pretty clean. The whole thing for me was this 89 level when we were coming into it last week, right? And we closed above. Technically, margin, that would keep you constructive. But here's the open of the week. Here's the buckle back below 89. I think you get a larger correction here, just my humble opinion. And it would bode well for a move lower, okay? For a dollar CAD move lower, that's CAD strength. For Kiwi coming off resistance, that's Kiwi weakness. That takes Kiwi CAD lower, theoretically. I always tell you guys not to make assumptions like that too stringently when you're trying to ascertain bias on various exotics or crosses, right? Not to do that. Well, I'm bullish this, I'm bullish that, so therefore. But when those biases hold and steadfast with what you're seeing in the price action, yeah, sure, I'll bring it up. Martin, does that make sense? Does that help? Aussie CAD. Haven't seen this one as of late. Haha. We just haven't put a scalp together, but we've definitely been stoking this one out. Here's the 618 retracement of the decline off the highs that we made back in 2016. Yikes. Here's your objective yearly open from last year. And last year's looks like it's the high day close. All right, this is pretty big here. Key resistance right into the 96 handle. You're getting radical divergence coming off of upslope resistance. We never got a correction off that move that we made back in June. I'd be looking for an exhaustion high ahead of 96. You need a break below, let's call it 93.50s for the correction. You got the monthly open right here, but it's also the high day reversal close that you made back into the close or into the high of June, right? So a nice zone between 93.52 and 93.70. Key resistance, break below this, you look for a larger correction. Yeah, it's the one thing I also take a look at. Aussie CAD flag will target 96. What time frame are you looking at? 96 is going to be the big, yeah, it's the big level for me. That's the key resistance. Upslope resistance, 2020 yearly open, last year's swing highs that we made back here in April. It's loaded, absolutely critical region of resistance. So yeah, if you're not holding any positioning, the trade I'd be looking at would be for a topside exhaustion pump into this. Or a break below 93.50s. One of those to give you the conviction turn in price. Would not be looking to get on the long side here. Last but not least, Aussie yen tends to be a pretty risk sensitive pair. Hasn't done anything. I looked at this earlier in the week, man. There's nothing to look at here either. Does have a little bit larger of an ATR than, say, an Aussie CAD, for example. But look, with price and SPX at resistance, ranging right below resistance the early open, Aussie yen trading right below resistance, 73, 75.13 here, 6.8 of the drop slope. You've got Aussie dollar trading right below yearly open resistance, 2019 open resistance, slope resistance, yearly opening range highs. All of these things continue to highlight resistance for Aussie. Doesn't necessarily mean margin that's going to pull back. And that's why for me, I've kind of been a let off on Aussie this week because I just don't, the inherent level for me to be looking at would be the short because we're coming into resistance on all these different time frames. For Aussie yen, the short would be, there would add conviction margin on the short if markets turned, right? But you're getting a breakout in SPX. I don't want to go short Aussie yen, right? If we hold above 32.26, this thing could launch into 33. But we're at resistance right now. We haven't got the validation here. We haven't got the validation there. Patience pays in this environment. We're trading into major highs. Look, it's not going to last long, guys. I know it seems that way because we've been trading at this level all week, but we don't spend much time at these critical junctures in price. What, 2-3 days max? We should be looking for something here soon. All right. Okay, well, that takes us right into the end of the hour session. And I got all of these questions out. Guys, I want to wish everyone the best of luck trading. I wish you guys an awesome, blessed, and safe weekend, guys. Data's light. You got EU meeting on Common Recovery Plan tomorrow. You got the Michigan Consumer Sentiment surveys here in the United States, but we're pretty limited on data, guys, until we head into next week. So keep your eyes on price action and broader market sentiment, specifically with what the SPX does right here today at this objective yearly open. Tiffany, March, and Jay, Kelly, Pete, Rohan, thanks for all your comments, and I will see you on Monday on Daily FX for the free session, and right back here on Tuesday and Thursday. Have a great weekend, guys. Cheers.